Hello, I'm John Cunningham. Welcome to the RedChip Money Report. For those of you new to this show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines a global multimedia platform with traditional investor relations, reaching a global audience of investors. Today on the show, you'll meet three companies. First, Interpace Diagnostics, stock symbol IDXG on the NASDAQ. Interpace Diagnostics provides clinically useful molecular diagnostic tests and pathology services for evaluating the risk of cancer. Later in the show, we'll learn about three commercial molecular tests from the president, CEO, Jack Stover. Then Advanced Medical Isotope Corp, stock symbol ADMD on the OTC. Advanced Medical Isotope Corp is engaged in the development of a brachytherapy device for the treatment of cancerous tumors. Brachytherapy uses radiation to destroy tumors by placing a radioactive isotope inside the treatment area. Later, we'll hear from the president and CEO, Dr. Mike Karenko. Then the final company we'll meet today is Next Group Holdings, stock symbol NXGH on the OTCQB. Next Group Holdings is a technology company which focuses on offering enhanced mobility solutions to the unbanked, the underserved, and emerging markets. Later in the show, we'll talk with President and COO Michael DePrado. Now, before we get to the first interview, our quote of the week: do your homework, understand the companies you invest in forwards and backwards. This is great advice from the highly successful money manager, Charles Diker of Diker Management. Now, the first interview today is with Jack Stover, the president and CEO of Interpace Diagnostics. Let's go to the interview. I'm here with Jack Stover, CEO of Interpace Diagnostics. Jack, welcome to the show.
Thanks, John. Thanks for having us back.
Now, Jack, a lot's happened since the last time you're on the show. You've done a great job generating growth while paring losses in recent quarters, and you've significantly cleaned up the balance sheet. For the second quarter, revenues were up 7% year over year. What's driving these improvements?
Yeah, it's been a very transformational time for us the last quarter and the last 6 months to date, no doubt about it. What's driving that activity, though, is very simple. It's performance. Our management team has performed in an excellent way, and they've made my job a lot easier. And certainly, a large part of my job has been restructuring, and we've spent a lot of time focused on restructuring the company, positioning our costs that are in line with our revenue stream, and continuing to build to growth.
Now, what's the essential value proposition? Why should investors take an interest in Interpace today?
Yeah, good question. A lot of things. First of all, I think we're really an excellent company. We are properly sized for our development and for our revenue growth and expectations for the future. Second of all, we're in a very exciting marketplace. Molecular diagnostics is really emerging as part of the personal medical field. So we're able to drive down the activities that we do, not to a group of people, but to individuals as well. In addition to that, we're able to reduce the cost of the healthcare system. We focus on indeterminate biopsies for cancer, thyroid and pancreatic cancer. And we're able to make a determination on an individual basis as to which patients should be reflexed to surgery and which ones not. In today's environment, somewhere between 60 and 70% of the patients are today being reflexed to surgery, and oftentimes that surgery is not required at this point in time.
Now, you consider yourself more a commercial company versus a molecular company. Can you explain that to the audience?
Yeah, another good question. In fact, our history is as a commercial company. So we have the infrastructure of a pharmaceutical or a device company in the molecular space. That's where we came from. And then we've chose the molecular diagnostic space as a place to use our skills. The reason is that what we found in molecular diagnostics was there was a need for that commercial experience to be able to put together the value proposition for the kinds of technology that we have. Another way to say it is that we've acquired the technology and we've integrated it into our infrastructure and utilized that historical experience in terms of commercialization to be successful. We think that differentiates us from a lot of other companies in the space, and it also creates lots of other opportunities to bring revenue into the company in a short period of time.
Now, another bright spot for the company has been increasing coverage of the commercial launch tests, ThyGenX, Thyramir. Talk to us about the coverage and what does it mean for the company and for investors?
Reimbursement and coverage for us is fundamental. The more reimbursement we get, the more successful we are, the better we are in terms of being able to build our revenue stream. The good news is that all of our assays are supported by Medicare, and that's a fundamental issue. In addition to that, we've been extremely successful on the thyroid side in terms of building our reimbursement, our commercial reimbursement there to also support our Medicare activity. And the reason that's so important is that our thyroid patients tend to be younger patients, and so we're seeing more and more commercial opportunities and less Medicare opportunities. We've had a number of very successful announcements. We have announced United Healthcare, we've announced Aetna, and just today we announced Oxford as covering our Thygenics assay. So when we end up being supported by reimbursement, it's not just a today issue, it's on a long-term basis, and certainly gives us the comfort and the support to be able to invest in our revenue stream, to be able to deliver the kinds of expectations people have about a growth company.
Now, what are some of the big milestones that investors can look forward to during the second half of this year?
We believe we have a lot of good opportunities out there in terms of success in the future, in the near future especially. So a couple that we're looking forward to. Obviously, we can't guarantee any of these, but certainly continued organic growth with our existing product lines is very important to us. In addition to that, we have a relationship with LabCorp, one of the largest lab companies in the space. We had a relatively short-term agreement with them last year. We're hopeful that we'll be able to extend that agreement in the upcoming year. Additionally, we have opportunities in terms of product enhancements. So you'll see, and we hope you'll see, the announcements of some of the clinical activities we have to support that, as well as new product launches in our GI and our endo space in terms of our teams. And then above and beyond that, our Barrett's esophagus product called Barrigen is a big market opportunity product for us. We've been doing a small kind of a soft launch with that product in the last 6 months or so. We're hopeful to be able to expand that, and we're looking for commercial partners to work with us on it. And so we are very actively working forward and moving forward with that activity.
Now, Jack, to recap, what's the main takeaway for investors? Why should they own Interpace today?
Certainly, as we look at it and we look at some of the evaluations that are done by research analysts, I think the first thing that is clear is that Interpace is a good value. We're trading just slightly above our cash position, and oftentimes companies in this space are trading at 3 or 4 times revenue. So we think there's some great upside opportunity as well. In addition, as you mentioned earlier, we've dramatically cleaned up our balance sheet. At the end of the quarter, we had about $36 million in stockholders' equity. In the third quarter of last year, we were a negative stockholders' equity. We've converted all of our debt. We have no debt. In addition to that, all of the royalties, all of the milestones that were overhangs for us are gone. So we think it's a great opportunity to be able to support the growth of the company, and we believe the upside is excellent.
Jack, thanks for being on the show today. We look forward to hearing more from you and Interpace.
I look forward to coming back.
If you like Interpace Diagnostics and want more information, visit RedChip.com. On there, you can subscribe to receive news alerts about the company, and while you're on RedChip.com, make sure to sign up for the weekly newsletter to receive news on different companies in the RedChip Nation. Now, the next interview today is with Advanced Medical Isotope Corp. We will meet with the president and CEO, Dr. Mike Karenko. Let's go to the interview. Dr. Karenko, welcome to the show.
Thank you. Glad to be here.
Now, Mike, your innovative radiogel platform technology is designed to deliver targeted doses of radiation to cancerous tumors. Can you give us an overview of the technology?
Yeah, I'd be glad to. People have called this a new tool in their toolbox. They're very excited about it. The best way I can describe it is to compare it to making Jell-O. You go to your refrigerator, you put the Jell-O in, it cools, and it gels. Hydrogel is just the opposite. when you put it into a tumor and it warms, it gels. And so you inject the tumor with a liquid directly into the tumor, and it gels, and it contains these teeny little particles of yttrium-90 phosphate. Now, yttrium-90 is the highest energy beta emitter, and beta is nothing more than an electron, like you see in electricity, but is very high energy and is very potent. We can deliver 5 times more radiation than an external beam therapy. So it does kill tumors. It also has a couple other features that are very important. It travels just a short distance, like a 1/4 inch. So it doesn't do collateral damage to healthy tissue. You inject it in it, it kills the cancer, and then doesn't hurt the healthy tissue around. If you have a larger tumor, you just more than one injection. And the short distance has other 2 advantages. It's it's very safe for the applicator, the doctors, the veterinarians. There's no shine, they don't have any risk. And then even if you're treated the skin, the patient goes home same-day therapy with no risk to the family and friends. Another important feature is that it has a 3-day half-life. So every 3 days, half of it decays away. So after 10 days, there's only 5% left. You don't have long-term lingering radiation. It does its job and it leaves the town. So it's a pretty exciting product.
Now, what are some of the potential applications for your technology?
Well, we reconstituted our medical advisory board in January. They contain over 125 years of experienced doctors. And we said, okay, here's all the cancers that you can treat. What are the best that are for a radiogel? And they came back, they were pretty excited, with 18 different cancers. Of course, the problem is you cannot get 18 different cancers to the FDA. So we sent them back based on criteria, pick the first one, the easiest one for the FDA, and they picked basal and squamous cell skin cancers. And that market alone, our projection is for us would be a $1.5 billion in revenues. And that's only one, and there's 17 more. So it really has some really potential applications and potential high stream, long-term revenue stream.
Thank you. Mike, what's the essential value proposition?
Well, there's probably 6 points I'd like to emphasize. The first is this is a unique, wonderful technology. You simply inject it in a tumor, the cancer dies, and you don't do collateral damage. Secondly, we have strong intellectual property protection. This is a treasure, and we're protecting it. Thirdly is a team. This is a competent team, and they work with a sense of urgency. And we believe in tapping into the best in the labs, universities, and the private sector. So it's a small team, but our extended team is quite large and very competent. Fourthly, it's incredibly large market potential. I mean, for the pink sheet company to have this kind of market potential is incredible. We have and a growth strategy is defined. Every time we get another indication for use, it's going to build. So this is a large market potential. And fifthly, we are not just going to wait for the FDA approval. We're going to be trying to generate revenue earlier with the pets and international licensing. And finally, what's driving our team is that we're going to help a lot of people and a lot of pets.
Now, you have the medical side and the veterinarian side. Isotope should have a faster timeline to market. Can you talk to us about your business strategy for that segment, and how big is the market opportunity?
Gladly. I love dogs, so this is dear to my heart. We are interfacing with 4 different nationally recognized veterinarian hospitals, university veterinarian hospitals, for six different cancers. So we're going to be using, in parallel, 4 different centers. The first step is to get approval from their independent review boards to do the testing. And we have approval from Washington State, and we're close. We're 3 weeks away from 2 others and about 7 weeks from there. So in about 6 or 7 weeks, we'll be testing in all 4 hospitals. The first testing was at Washington State on feline sarcoma. We just did 2 cats, and they just completed the pathological examination. They haven't written us the report yet, but Dr. Janine Fidel communicated to us. He said, we looked at the results, tell the FDA that this product works. So we're pretty excited about that. It's first concrete demonstration that this is an effective product. What we learned from that simple test was a surprise to us also. The procedures that we use for treating feline sarcoma are exactly to the ones we're going to use for skin cancer. So we already have developed these techniques much more rapidly than we thought, and we'll be communicating that to the FDA. In terms of the size of the market, it's not to be sneezed at. There are 78 million dogs and 86 million cats in the United States. And unfortunately, after they're 10 years or older, 32% of the cats and half of the dogs will get cancer. And now our radiogel can't cure all those cancers. There's different types, there's blood cancers, but the ones we can cure, the 6 or 8 that we think we can really treat, that conservatively is probably $40 million a year market. So that's our projection.
Now, in summary, why should investors take an interest in ADMD today?
Well, it has the best worlds. If the device actually translates to real savings, like we believe it will, and so it'll be a faster path to the FDA and a huge market potential of a drug. And then in the meantime, in fact, it was Westinghouse Corporation that taught me this years ago, you have to try to make revenue every step of the way. So we're going to be focusing on making revenue from the pet sector and from our international sector. And I should say our team is small, but it's really competent. And what's important, and it doesn't seem like this, we operate with a sense of urgency. Time is money. We're working 7 days a week. We're excited about it, and we think that's going to go a long way. We really, and we know the medical community, the ones we're talking about it, are anxious to get this new tool in their toolbox. But what's really driving us, and why I came out of retirement, is there's a potential to help a lot of people and a lot of animals.
All right. Well, thank you, Mike. Pleasure having you on the show today. We look forward to hearing more from you and the company in the future.
Thank you.
If you like Advanced Medical Isotope Corp and want more information, visit RedChip.com. On there, you can subscribe to receive news alerts about the company. And while you're on RedChip.com, make sure to sign up for the weekly newsletter to receive news on different companies in the RedChip Nation. Now, the next interview today is with Michael DePrato, the president and COO of Next Group Holdings. Let's go to the interview. Mike, welcome to the show.
Thanks for having me.
Now, Mike, Next Group is targeting the unbanked and the underbanked market in the U.S. with a suite of financial and communication solutions. Let's start the interview off with a brief overview of the business.
The business is really kind of our grassroots in telecommunications, moving that and converting that composition into a financial product subset that not only yields a savings to the consumer, but a more multi-threaded customer base that we can grow into the future.
What's the essential value proposition, Mike?
Basically, our target demographic, again, the Latin demographic, is really fixated on a fixed income every month. And what our value proposition is, with using our ubiquitous product and plastic card, debit card, reloadable card, and all our value-add propositions that are enabled onto that card not only saves them money, but it also enables them to play into the financial market that you and I are accustomed to with debit cards and online payments.
You recently signed a couple of letter of intent to acquire some key assets. Can you talk to us about the Azu Group that you announced in the first quarter? What will this acquisition do for the company?
I think Azu Group is really a very complementary product subset. It basically takes our cost of acquisition. Again, our product is plastic cards or reloadable debit cards in consumers' hands. The acquisition brings down about a 70% cost of acquisition to that yield. So basically, it's the plastics that we subscribe to enable to the retailers and distributors around the United States.
And now you also announced a letter of intent to acquire Limecom, which is a leading global telecom. Can you tell us more about that business and what will it mean for Next Group?
Yeah, Azu is about 14 to 16 million euros or US dollars worth of revenue. Limecom is about 124 million worth of US revenues. And how that is really keenly fit into our proposition also is our rewards matrix or mechanism is to reward our customer base with long distance minutes. So obviously, if we have that in our back pocket at such a width and breadth, it's advantageous to the consumer as well as our product subset.
Now, taking a look at the numbers, revenue was up substantially in the first quarter. Net income, 3 cents per share. What's driving that performance?
I think it's a couple of components. I think one is we had a key acquisition about almost a year ago that really contributes to basically shaving off or yielding no burn rate for all intents and purposes. Add to that complement, you have the component that we took off $1.8 million worth of debt and converted some other some notes that we had from our founders into shares. So that basically kind of cleaned up the balance sheet and put us in a posture to have an 811,000 profit quarter for the Q.
Now, what milestones should investors look for in the remainder of 2017?
I think executing on our LOIs to actually close those acquisitions and moving that into the product subset that's going to yield not only the $150 million worth of annualized revenues between the three companies, Azu, Limecom, and NGH. And I believe that composition and that revenue with a projected $5 million EBITDA will have a nice, compelling reason why investors should invest.
In summary, why should investors take an interest in NXGH today?
I think, honestly, if the investors and the public community would take a look at the contracts that are already been executed, what we're actually bringing on into our product subset, and the multi-threadedness of that complement, and the thirst and the need for that product subset to enable the underbanked and unbanked segment, I think that fundamental would have any consumer and any investor both of interest to our product subset. This is something that's not that we're thinking about executing on. This is something that we actually executed on in regards to our financial products and our gift card components.
Mike, thanks for being on the show today. We look forward to hearing more from you and Next Group in the future. Thanks
so much for having us.
If you like Next Group Holdings and you want more information, visit RedChip.com. On there, you can subscribe to receive news alerts about the company. And while you're on RedChip.com, make sure to sign up for the weekly newsletter to receive news on different companies in the RedChip Nation. To recap, we met 3 companies today. First, Interpace Diagnostics, symbol IDXG. Note they just reported their second quarter 2017 financial results. Their net revenue grew 7% over the prior year comparable quarter. They raised over $22 million in capital in the past 6 months, and they eliminated all long-term debt and related royalties and milestones. The full press release is available on RedChip.com. Then we met Advanced Medical Isotope Corp, symbol ADMD. They're planning to generate near-term revenue from veterinarian clinics and international licensing by the first quarter 2018. And we learned that radiogel requires no pre-market approval for pet therapy. We have a plethora of information about this company. Just visit RedChip.com for it. And finally, Next Group Holdings, symbol NXGH. They generated record revenue in the second quarter of 2017, and their disruptive point-of-sale technology platform offers retailers an opportunity to add new revenue streams in unbanked communities. Visit RedChip.com for more information about NXGH. Now remember, small cap stocks could break out at any moment, and they're often highly volatile. So be sure to diversify. These stocks are for your speculative money, and while the gains can be significant, you also must be prepared for the downside. And note, RedChip may hold positions in any of these stocks on the show. Sometimes we receive monthly cash payments and stock to represent companies on the show. You can read our disclosures and get more at RedChip.com. Thanks for being with me. I'm John Cunningham. I'll see you the same time next week.